To me, it's not about how do we pay people thousands of dollars for playing a game. That's obviously not sustainable for everyone. What it is about is shifting the narrative so that instead of people expecting to not own anything and that they get a raw deal, they get entries in a centralized database, the default is like stuff in real life, like owning your phone when you buy it, the ability to actually have control over the things that you should have control over.
We give them our information and they sell it back to us because we just don't know any better. My health data could be an NFT that I get a return on every year if I give it to a platform, or my search data when I connect to a platform like Facebook or YouTube. These are all potential NFTs that we could all own in the future, earn returns on, or at least have the ownership of that data more than anything.
Fundamentally, all the innovation of an NFT is taking the core innovation of Bitcoin, of fungible cryptocurrencies, and allowing that to be expanded to every form of unique value in the world. Even if you think about shares on the stock market, they require a unique data format to be stored and traded because you have different types of share preferences. You have different classes of stocks which have different imputed voting rights. And so even on things that people would traditionally think, hey, this is fungible, this just requires this ordinary technology, it actually requires NFTs. What the power of this stuff is providing liquidity to everything, creating the global market for any unique asset. That's incredibly powerful. It's off the trend of financialization that we've seen exponentially increasing over the past 2 decades, and it's absolutely inevitable over the next 2 decades.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go? This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Robbie Ferguson, the entrepreneur, NFT expert, and blockchain gaming pioneer. You are the president and co-founder of Immutable, a layer 2 protocol that leverages the power and security of Ethereum to provide scalable blockchain infrastructure for video games, offering users instant trade confirmation with 9,000 transactions per second and 0 gas fees. Prior to Immutable, you built an automated capital gains tax platform at KPMG, which was licensed to Australia's largest cryptocurrency exchange. And in 2018, you launched Gods Unchained, one of the first digital collectible trading card games built using blockchain technology. Last month, Immutable announced a partnership with GameStop to launch its NFT marketplace alongside a $100 million fund dedicated to supporting Web3 game development. Your goal is to make the minting and trading of NFTs accessible to all, acknowledging that future generations will spend most of their waking hours in a virtual reality world. Robbie, welcome to London Real.
Thank you. I don't think I've ever had my vision and goal in life so succinctly summed up. And so that was absolutely correct.
Fantastic. First of all, congratulations. You just announced a funding raise, and I'd love to jump into some of the details because those are big moments, for you guys. But before we jump in, for people that don't know much about Immutable, how do you explain what you guys are doing there to the average person in the streets and even to some of the cryptocurrency aficionados? How do you kind of convey what you guys are doing there?
It's probably different for both of them, but fundamentally what Immutable is a global platform that allows businesses to create and trade NFTs scalably and efficiently on Ethereum, the most powerful blockchain in the world. And we also connect liquidity across anywhere you want to trade NFTs. So if you decide to sell an NFT inside a video game marketplace, someone can buy that very order from GameStop's NFT marketplace powered by Immutable, or OpenSea powered by Immutable. And so we're this connective tissue or the global backend for liquidity of unique assets.
And you got a bit of a gaming background. I mean, you spent a lot of time playing games, creating your own games. And this was always one of the big missing factors in games. We spent so much time there. I mean, I'm old enough to remember the arcades in San Diego, California. 10 tokens for $1, baby. We was going in there playing Frogger, playing Galaga. And then later we got the Atari, we got the Nintendo. And then I was playing Castle Wolfenstein on my Apple II Plus. Lord knows how many assets I created over the years. And yet I could never take them with me, right? And this is something that I guess it's quite a simple problem that's never really been addressed. Is that really essentially what Immutable is going to do? Allow people to I don't know, find the value that they created while playing?
Precisely. And that's just the start. That's just gaming. Ultimately, what we will see is NFTs eat pretty much any unique form of value in the world. So it will start with digital native assets. It will start with video game items. It will start with digital forms of art. It will start with tokenizing IP and royalties rights, as we see with sort of the musicians who are getting paid more in the last year than they ever have before from platforms like Spotify. But where it will go to is you owning everything. And I think the really, really powerful thing about Web3 and NFTs in general is not just digital scarcity, but the ability for users to be in charge of their own economic destiny on platforms that are traditionally controlled by big businesses. So it's no longer Facebook owning your data. It's no longer Twitter owning your data and monetizing it. You are ultimately the one owning your tweets, owning your images, owning your content, owning your financial instruments. And so whether it's really sophisticated, whether we're tokenizing an in-game item or tokenizing a Banksy or some rare digital art, or whether we're just tokenizing the most basic information, right, or tweet, ultimately everything is going to be traded via this data standard, because that is fundamentally something which allows users to own it rather than the businesses.
Yeah, and it's an important concept for people to understand. You've even talked about the wine industry. The secondary market there is so big. You know, tokenizing, we've heard real estate, tokenizing all sorts of assets. One of my students the other day talking about tokenizing a racehorse the other day. I mean, the possibilities are endless. And yet, do you find that most people still have a hard time getting their head around, even owning their own data on Facebook is it's quite a big leap for people to make, right?
Of course, because the companies who have solely this technology have every incentive to make it seem as normal as possible for you to give up every single right, for you to give up data that you don't know about, for you to give up IP that you don't know about, and for this constant erosion of the right to privacy, because it's not just to consent one time. Technology keeps getting better and better. And so what you're giving away becomes more and more valuable until, if it's an economic model of your marketing behaviors, they essentially have a perfect model of how you're going to spend. And that keeps improving year over year. And so we're giving away higher fidelity forms of our data each year. And there's no norm that suggests to counteract that. And so exactly what you said, which is, you grew up playing games and you never thought, hey, why don't I have any rights to this stuff? And so to me, it's not about how do we pay people thousands of dollars for playing a game. That's obviously not sustainable for everyone. What it is about is shifting the narrative so that instead of people expecting to not own anything and that they get a raw deal, they get entries in a centralized database, the default is like stuff in real life, like owning your phone when you buy it. And even those are being eroded by the right to repair. But the ability to actually have control over the things that you should have control over.
Yeah, it's a powerful moment. I think I had Yatsu here of Animoca Brand, so I know just was one of your investors recently, and he called it digital colonialism. We give them our information and they sell it back to us because we just don't know any better. And this is just the truth. But when people step back and realize that, wait a second, my health data could be an NFT that I get a return on every year if I give it to a platform, or my search data when I connect to a platform like Facebook or YouTube is valuable to me, and maybe I get an annuity every year, or my photographs or my face recognition. I don't know. These are all potential NFTs that we could all own in the future, earn returns on, or at least have the ownership of that data more than anything.
Precisely. And I mean, even think about your insurance contract for your house or a term deposit you might have at a bank. All of this stuff, we just trust in existing financial systems. And so fundamentally, all the innovation of an NFT is taking the core innovation of Bitcoin, of fungible cryptocurrencies, and allowing that to be expanded to every form of unique value in the world. and the vast, vast majority of value in the world is unique. It's not currencies, it is everything else. And in fact, even if you think about shares on the stock market, they require a unique data format to be stored and traded, because you have different types of share preferences, you have different strike prices, you have different classes of stocks which have different imputed voting rights. And so even on things which people would traditionally think, hey, this is fundable, this just requires this ordinary technology, it actually requires NFTs.
Yeah, it's an important point. I'd love to jump into kind of that definition of NFTs, but I've had guests here that say even Bitcoin is you can tell if when one was minted as opposed to another one was minted. So they're not as fungible as you might think they are. And like you said, all Apple shares, each one was issued at a certain time. Some were on the IPO, some were secondary. Like you said, they're less fungible than you think they are. And so maybe we jump into this three-letter word, which I think is now more searchable than crypto, according to Google searches recently, NFT. I think probably one of the most misunderstood acronyms in the world. I think the world heard about it when Banksy, sold his 5,000 days, and all of a sudden people thought, oh, NFTs are digital things that cost ridiculous prices. And maybe we'll never get a true understanding of this with people, but how do you start by talking about fungible tokens versus NFTs? Like you just said, most of the things in the world are NFTs. That's an important place to start.
Yeah, I think I agree, which is NFTs are misunderstood. And what we've seen in 2021 is luxury art, NFTs. And it's like saying to someone, hey, a JPEG or an image is only memes. It's just a very, very small vertical use case of that instrument, of that data construct or standard. And so right now, NFTs are horrendously mispriced as a collectibles asset class, as basically being luxury art, which, don't get me wrong, is an awesome use case. I think it's brilliant that artists can be economically empowered and that you can have this idea of digital scarcity. I think it's awesome to invert this concept of provenance and make it so that provably only a digital NFT can be unique, and even real world art can be, have questioned authenticity. But what we're going to see and what Immutable is focused on is how do we start tokenizing everyday stuff with utility, stuff you want to trade, not for the reasons of speculation and seeing it go up in price, but because you actually want to own and trade that asset. And one of the first verticals that we see as being really important in that segment is gaming, because for instance, in Gods Unchained, the trading card game that Immutable makes, the average trade value is $2. And people trade these assets because they want to use it to win a tournament or to win a game. And so we're talking about tokenizing things that everyday people want to own and trade to use, not just to speculate on. And that is the lens through which I think we can see the future of the industry. Because if you look at the adoption curve, the vast majority of value is not coming from the 50,000 odd rich collectors collecting, Beeples and sort of the expensive PFP projects. They're brilliant. Again, don't get me wrong, I really love what they're doing. And I think there's huge innovations around incentive mechanisms through things like BAYC, like Bored Apes and fractionalization. But the value is in the long tail. It's in how do we take this to 1 billion users across gaming? How do we open up liquid markets for things that are traditionally non-tradable? How do we take term deposits and make them tradable and suddenly have an efficient market for global interest rate? And so what the power of this stuff is providing liquidity to everything, creating the global market for any unique asset. That's incredibly powerful. It's off the trend of financialization that we've seen exponentially increasing over the past 2 decades. And it's absolutely inevitable over the next 2 decades.
Yeah, and I want to talk about how you're doing that with Immutable and these zero gas fee transactions. Before we get there, were you surprised at the narrative arc of the NFT? And you have to admit, it was probably the greatest piece of PR
Yes.
that you guys or anybody could have received, because it got so many eyeballs on this space. Again, such a high search term on Google. People know what it is. I gave my 17-year-old daughter an NFT. She thought I was the coolest dad for a couple days, but it was a pretty amazing way to draw focus and attention. Some call it the gateway drug of crypto right now. What do you make of what happened in the last 18 months? Did you see any of that coming?
So obviously, long term, we fundamentally believed in NFTs. Otherwise, we wouldn't have built an NFT business and dropped out of university, which I did, to start it way back in 2017. But I certainly did not expect literally it went from something that no one would ever know about, if you ever saw, to being a household concept thing that you hear about every few days. And that is pretty rare in the space of a year. And for the first 3 years of the company, when we were building Immutable X and we were building out these examples of how to use this platform through things like Gods Unchained, if you go to godsunchained.com, which is one of the blockchain's most popular games, it's a trading card game that we make, we actually don't mention the word NFT anywhere. And we haven't since the start because we thought it's crazy. It's like mentioning a deep technical concept to an end user. It's like trying to explain HTTPS and end-to-end encryption to a user who's coming to your encrypted website. It's just crazy. Just show them the benefits. Say your password is secured, say your communications are secured, show them the green lock. And so we really just thought, and I still think there's a lot of truth to this, the benefits of NFTs should speak for themselves. You shouldn't have to say to a user, hey, you have an NFT. You should say, hey, you have guarantees over how many of this item can ever exist. You can sell the item. The item is worth real value. No one can take it away from you. Your publisher can't pull the rug from underneath you and economically change the rules of the games. And I still think there's a lot of truth to that. Not necessarily in always hiding the word NFT, but we have to create use cases and applications which stand alone, which create an incredibly good experience without having to sell it as NFTs, because only then are we actually realizing the value prop of this technology. But harking back to your question, it's insane. It's pretty wild to be on the inside track and seeing something which literally no one knew about become a household name. But it's also pretty cool to see one of the fastest emerging markets in history kind of crystallize so quickly. And what we're seeing is this catch up. Traditionally we saw people experiment and create innovative technology, and slowly they build more traction. And finally, early VCs come in, and crypto has really turned that on its head, which is capital is there from the start. People are there to fund experiments, and I think that's actually awesome. Sometimes it means you over-allocate capital, but really what it means is you just get to the end point, which is transformation of society for the better of people much, much faster. Because I promise you, what we're currently investing in Web3 and crypto will look like nothing compared to it just being the state of the world. Just like the valuations or investments we made in the 90s in the internet are nothing compared to business as usual today for information technology companies.
Yeah, and you're right. It's happening much, much, much faster when you can tokenize it and get that capital right away. And it's a little bit of your business model, which I'd love to go in later, as far as how you use your tokens in a way that's very Web 3.0, not 2.0. And like you said, almost cut out that loop that's been in the tech business for 67 years since semiconductors started, where you got to go get the VC, talk them into it, they invest, they got the Web 2.0 mentality where we want to get the returns. So then it's not open source. You don't really give it to the user, and you end up building something that doesn't always work. Whereas this Web3 mentality, you have to think of it really differently. And I'd love to get those thoughts from you as a president as we come in through. You've talked about NFTs, and I think this is a quote from you where you said, look at the total addressable market of NFTs. It's insane. Nothing has ever emerged so fast, from 100 million in gross marketplace volume in 2020 to over 23 billion in 2021. Can you think of anything in history that's accelerated at that pace?
No, even the information age, which has been the defining catalyst in human history, did not progress that fast. So no, I think it is absolutely insane.
And you've gone on to go further, and you said, to me, the gaming NFT use case is like 0.01% of what's going to be in even 12 to 18 months from now. That means, 10,000 times bigger 12 to 18 months. Am I getting you right on that quote?
I don't know if the time frame will be 12 to 18 months, but absolutely over the next decade. And gaming will be a very small fraction of what NFTs will ultimately trade in terms of value. We're talking about every form of unique financial value. We're talking about intellectual property. We're talking about centralized registry assets like timeshares. We're talking about physical assets like wine, like sneakers, with projects like StockX. And so we're really talking about stuff, both digital and physical. It is the superset of every form of unique value that humans interact with and use to fulfill their lives. And we saw the wave of DeFi. And ultimately what DeFi is financial services that are decentralized. And financial services exist to service people's interests. And those interests are fundamentally stuff. We have the ability to create options around things. One of my favorite stories is I think it was Bridgewater, don't quote me on that, who created the options contract that allowed McDonald's to create chicken McNuggets, because otherwise they didn't have the stability on one of the core ingredients in order to create stable cost of goods. And so ultimately, DeFi is secondary to actually being able to tokenize stuff, to create real value for people who want to use these items.
Yeah, it's a great point. I actually grew up in the 90s in the derivatives marketplace in New York City, and I ran a fixed floating swap book, which doesn't sound very sexy. Go out to 30 years, you could pay me a floating rate, I'd pay you a fixed rate. I'd make you go market on any size, both ways. It was a fairly new derivative instrument, but little did I know, as a 22-year-old kid pricing deals, I was actually helping the facilitation of dams being built in Africa, student loans being issued, pension funds being able to, pay out things early. Because of that finance aspect, I was empowering a lot of marketplaces. And like you said, even with options contracts, you're making previously unviable ideas now viable. When I saw the DeFi summer of 2020, I was like, holy, wow. I had been keeping an eye on crypto for a while, but when I saw that in the total value locked, I said, wow, this is something that cannot be ignored. And when Yatsu was here, strangely enough, he said, Brian, if it wasn't for DeFi summer, we wouldn't be where we're at in gaming. And I thought that was the first time I ever saw someone in the metaverse space acknowledge that liquidity that was provided there helped propel things. And we saw that with Axie, et cetera. So as I tell my students, we have a DeFi Academy, it's all linked. You can't just be like, I just look at Bitcoin or I just look at DeFi. You have to know what's going on in the metaverse. You have to know what's going on with NFTs, because they all kind of pull the shirt a little bit, and it all goes in different ways. So I'm curious what you think about that.
I completely agree. I think the DeFi summer was instrumental to more capital allocation to crypto, to innovations in tokenomics that are used in games today. And I still think tokenomics in gaming is finding its feet. I think it has been a very lossy economic loop so far, as in we have a lot of value being pumped into these systems out to people. And I don't necessarily know whether they're sustainable right now based on how lossy these games are through retention. Like, they're just not good enough yet as instruments. But we're going to start seeing, like, the fundamental tokenomics, I think, are there. As these games get better, we're going to start seeing games that outcompete Web2 games by orders of magnitude. Because, these games are operating on razor thin margins, especially in mobile gaming. You literally have in China billboards of two mobile games that are identical. One is a clone of the other. Like, you have a clone of Clash Royale, and it advertises itself as having cheaper in-game transactions. They're saying, hey, you can buy your hero loot boxes in my game for 50 cents versus $1 in this one. Like, that's how commoditized it's becoming. And we have the possibility to create a incentive structure between publishers and players that is just so much better. And the backbone of that stuff is built on the efficient distribution of value and incentives. Like, that's all it is. And so, the thing that really sells me on why NFT gaming makes sense is currently the biggest games in the world spend billions of dollars on ads, acquiring users, and those billions are paid to Facebook and to Google. None of that goes to players. And so when people say it's zero sum or it's negative sum to create these true economies, it's absurd, because I could take a fraction of that value, put it into backing a meaningful economy for players, and you will have your player growth solved. People will play your game because you're giving value to them. They will share your game because you can incentivize sharing, and they will stick around because they own a piece of the pie, because they have exposure as a co-owner or of a cooperative of this game. And it's just a much better business model. And that's a microcosm for how the entire ownership economy is going to transform everything. NFTs will be the fundamental primitive by which people engage with their social media applications, their financial applications, how they self-actualize. And at the end of the day, the businesses that will succeed are the ones that share value in the way that helps them grow the fastest and exist the longest. And by definition, because your stakeholders and shareholders are no longer people in the public markets, it's literally your users, it has to be a pro-user or pro-player application.
Yeah, those are some big concepts, Robbie. Sharing between businesses, pro-user or pro-customer, pro-community. If we're honest, those things don't really exist in the Web 2.0 world, do they? Google doesn't share with Facebook, doesn't share with Amazon, doesn't share with Apple.
Well, only insofar as economic incentives permit it, right?
Right.
Like, that's at the end of the day, which is what governs everything.
Right, and it's rarely pro-user. I was speaking with a guest last week, And I was talking about how I've been 10 years on YouTube, and I was talking about how I ran in the background a parallel email list. And we both realized that I was basically trying to get the data that I wasn't being given by my Web 2.0 platform. I was talking to Ronil from Audius, and he's like, well, we give you the data of the customers. And I was like, I spent years just trying to get my customer data via the Web 2.0 interface. And it was this painful process where obviously it was a little bit of an antagonistic relationship. I got it anyways. But yeah, what we're talking about is sharing it, right? And empowering those users and saying, here, go ahead, go peer-to-peer, create amazing value, create an amazing marketplace, change the world. The growth from that, the benefit economically is just going to be orders of magnitude bigger, right, than this old model.
Absolutely. I mean, the ability that people can make a startup and make an idea in a product and instantly have a core user base, instantly have core product market fit or assess it is because of how much value they're able to give away to these early users. And so, really the thing to me is incentives. Like that's the big innovation of Web3. By creating digital scarcity and by creating true self-custody, you enable the fundamental requirements that permit better incentives. And at the end of the day, I think that's why a lot of Web2 audiences, whether it's gaming or whether it's in the rest of the world, are so skeptical of what Web2 promises. Because it sounds nuts to say, hey, you're like the company now cares about you, because it's what people virtue signal for decades and is not true, because companies are profit minded. They exist to make a profit. And in the paradigm of Web2, the only way you can really make a profit is in general by extracting value. But when you flip the fundamental incentive mechanisms and you allow, or you actually force the most successful companies to be pro-user, that's really what it's about, is that forcing function. Then suddenly that's the default equilibrium. That's the fit for the market, is a company which is pro-user.
Yeah, it's an incredible concept. I hope people are kind of understanding it. And again, just to reference what you said, a big game developer in a closed environment might come out, I'm going to spend $2 billion on marketing. I'm going to go blast it on the platforms and hopefully you'll buy my game. You can't take your information out of the game. And you're saying, well, look, I'm the president of Immutable. I'm going to take that $2 billion and issue it as tokens to the users. I'm going to issue it as funds to marketplaces so people can innovate on this platform. And you're making a conscious decision that, yeah, this is how I'm spending our treasury on these very different aspects. I'm not going to give a third to a half to these platforms. I'm not even going to market to you, right? You're not going to try to sell me. You're going to empower me and give me ownership. You're one of the few presidents that I've heard really articulate that, Robbie. And I don't know, did I get that right? Or maybe you can go a little further, because some people, you get asked questions a lot of times, well, why are you allocating tokens here? Why are you putting a chunk of tokens there? And you're like, this is how we grow this. This is the only way to grow this.
Yeah, and again, it's not a magic business model. It's you're giving players more value, and that can be measured. And when I talk to people, big game developers from the Web2 world, and they say, well, this is cool. It's interesting. We'll have a corp dev team on this. We'll look at it defensively, but why would I do this? You can say to them, well, you care about three things. You care about cost of acquisition of users. You care about lifetime spend, and you care about retention, maybe some other smaller mechanisms. But all of those metrics can be measured and are quantifiably improved by using an NFT-driven business model. When users actually own their assets, their lifetime spend goes through the roof. They'll spend 10 times more, because you will spend more in a house that you can sell and one you can't sell by a large factor. It is an asset rather than an ability to use something in a confined ecosystem. When you own assets that give you exposure to the future of success of the game, your retention rates skyrocket and your viral sharing propensity skyrockets. You're happy to share this because it's part of your identity. And when you can incentivize people to adopt your game through play to earn, your cost of acquisition plummets. You can say, hey, we'll literally pay you $5 if you can get to this tutorial. And that is profitable, because otherwise you're spending $20 to acquire through a leaky bucket of Facebook and Google ads. And so it's this brand new way of distributing in a way that it aligns incentives between the people actually bringing the value. And I think the perfect example of this is, let's look at streamers. They have, for the 15 years they've been around, arguable whether it's more like 10, as a popular profession, only monetized through patronage, which is nuts. Like, Patronage is the monetization model used by barons to pay bards back in the 1700s. And so to say that that's how we should measure and reward people who are streaming digital content in the 21st century is simply insane. And now we can say, well, hey, we can actually measure the exact value a streamer brings to a game in terms of eyeballs. And when Ninja wins a Fortnite tournament wearing a John Wick skin, he can sell that exact John Wick skin to a crowd of clamoring fans via a Twitch overlay. And all of the added value to that NFT is value that he keeps. And so you align incentives between the distributors and the actual gaming publisher themselves.
Yeah, it's a great analogy. And we've seen it happen with crypto, right? We've seen the fact that, you can share it, you can be invested in it. We've seen that have this, triple digit year on year exponential growth. And now you're saying, well, yeah, this is what NFTs are going to do. Probably it's the second order, takes a little bit more understanding for people, but everything you're saying makes a ton of sense. And I'd love to jump in to how you guys plan to solve it, because it's important to think about how you approach this problem. Robbie, the biggest complaint I get in my DeFi Academy is the gas fees. Everybody's complaining every week about the gas fees, because what I try to do is I get my students right into these DeFi protocols so they can understand them quickly. Sometimes it's their first yield swap, it's their first liquidity pool, it's their first hot wallet. And I get them through to do it on the Ethereum chain, because guess what? It's where the liquidity is, it's where the simplicity is. And they end up soon complaining about gas. This stops a lot of things from happening out there transaction-wise. Tell me how you decided to approach this problem, why you decided to use the Ethereum chain, but also how you can lower your gas to zero, because that's how you can start trading $2 NFTs.
Look, we've pretty much been at the coalface of trying to scale Ethereum since day one, since December 2017, because back then we launched the first multiplayer game on any blockchain. It was called Ethereum. And all of the logic of this game was on-chain, it was on smart contracts. And so today, if you try and run a round, it will cost you $5,000. Like, it is the most gas inefficient thing. And we learned a lot about what should actually exist on-chain versus off-chain. But we also had to learn a lot about scaling Ethereum from day one. And so when you hear about things like batched minting or deferred minting, these are things we invented along the way in order to try and shortcut optimizations on Ethereum. But really, they are band-aid solutions. And what we ended up really looking at is, well, what was the possible scaling futures for blockchains? Was it building an entirely new blockchain, sometimes known as, alternative L1s like EOS or Tron or, Solana, which is popular today? There's been plenty, and there's been plenty of them called ETH killers. Is it building another blockchain with a bridge to Ethereum called a side chain like Polygon? Is it using a state channel based solution, which we looked into? Is it using an optimistic based scaling solution, or is it using a zero knowledge rollup based scaling solution? And these two came a lot later in the piece. And this stuff, like Plasma and state channels, never really worked out. And fundamentally, the reason we don't want to build a new chain either is we strongly believe that network effects are going to determine what fundamental chain wins. And I'm not saying Ethereum is going to win, but right now it has by far the most network effects. And we think it's really important to use them to be where everyone wants to be, and also to be where the most security is. And by far, Ethereum is the most secure in terms of game theoretic cost to attack the network, in terms of decentralization of nodes, and actually people who store full copies of the block history, which is necessary to ensure sort of data decentralization. And so then you have this question of, well, what's the best layer 2 scaling solution? Optimistic or zero knowledge rollups? And optimistic is great for some things in the medium term, like DeFi. If you want to scale NFTs, it is hands down zero knowledge rollups. And so that's a long-winded way of saying we arrived at this choice with very high conviction. We arrived at the choice of Starkware, who's exceptional as providing in the space with very high conviction. And what this allows us to do is to take a whole bunch of user trades or creations. So trading an NFT from user to user, you're creating it as a business. And we can basically fit 600,000 inside a single block of Ethereum, where this actually enables us to do more than 10,000 transactions per second when Ethereum reaches 3. And this is not a magic 10,000 per second. This is not a, I won't name names, but pretty much every other TPS out there is theoretical. This is what we've proven in production. We've done tens of millions per hour. And so what this enables is the planet scale that is required to support all of the stuff we discussed on this call. If you're going to do term deposits for billions of people on Earth, you need TPS that makes Visa look like a turtle. Like, you need the ability to have throughput that is incredibly efficient, but also never loses its security. Because at the end of the day, we're talking about tokenizing trillions of dollars worth of stuff in the long run. And if you don't believe me, Vitalik himself has said Ethereum will be all in on zero knowledge rollups as the scaling solution for the future. And so that's pretty much what we do. And the very short technical summary is it's compressing. It's like uploading a zip file of activity to Ethereum itself. And that means it's really, really efficient in terms of carbon footprint as well, which we completely offset. And I think I'll leave it there. Actually, I think I've spoken enough about the tech.
That's helpful. So you're actually using zero knowledge proofs, because I know a lot of other networks are thinking about using them. They weren't yet practical to use. I think I had Professor Silvio Macaulay here of Algorand, and who I think might have wrote one of the original papers on zero knowledge proofs. But even he was saying that's going to be something that's more realistic in the future for our network. You're using this now.
Yes. So we have been using it in production for nearly a year. And I think you're exactly right. So there's a lot of solutions out there today which are saying, zero knowledge is coming in a year, in 2 years, while they kind of shuffle you into a intermediary scaling solution. And we're never happy compromising on the security of users' assets or the scale that was needed to support big business. And so for us, a single user having their assets stolen from them is a crisis event for the protocol. And so we put that first. And that's why we never considered any custodial solutions primarily as well. It had to be self-custodial by design. Users always had to take custody of their assets. And so the things I'm really proud about our protocol is, if Immutable goes away, if for whatever reason I leave tomorrow and Immutable goes to dust, you can always withdraw your assets to layer 1 Ethereum. And that's what is really important, is that ability to say, hey, I literally have Ethereum NFTs. And that's what gives them the premium value as well.
Yeah, it's an important point. Could there be a time in the future where Immutable plugs into AVAX a year from now or 2 years from now?
We'll see.
Okay, all right. But right now, the network effect is so clear that you're not thinking about that. You're just thinking about moving your tech forward.
Ethereum is the place to scale for right now. Everyone wants to use it. Building the best platform and then with the best technology partners is what we want to do.
And their high traffic scenarios or high gas fees don't affect you because you're running your own ZK tech inside of that. And so you use it for security. I mean, I guess you do have to cross it, with all of your batch transactions, but then it's so small.
Yeah, we've still got to pay gas.
Right.
And absolutely. And then as part of our treasury strategy, we hold Ethereum. We have costs nominated in Ethereum. But this is where you have things like ETH 2.0 coming out, which will mean we can operate even faster and with even higher levels of scale.
When's ETH 2.0 coming out, we reckon?
Look, your guess is as good as mine. But I think hopefully in the 2020s.
Stani Kulichev was in my studio and he said sometime in the next decade, and then he smiled. And Stani's a big fan of ETH and has a huge protocol on there.
Yeah.
But he said that. So look, I appreciate you addressing that. Now let me actually ask you something. We minted our first NFT a few weeks ago, and I did a live stream broadcast here, Robbie. It got watched by like 1.5 million people. And we took some kind of documentary style photographs that day. And I thought, you know what, we're going to mint 100 NFTs. I'm going to embed a piece of video inside the NFT, and we're going to give it away to 100 of our most loyal users. And I thought that way I can finally get some experience in NFTs and not make all the mistakes everyone's making. All right. Now I went to look at what was out there, and everyone's chirping in my ear about what network to use. And I said, I'm using Ethereum, and I'm going to go on OpenSea, and I'm going to pay the gas, and I'm going to send you these things because I want this thing to work. I recognize that's where the volume is. I teach students every day who can barely figure out Ethereum blockchain, let alone some other layer 1. And, we embedded the video, and it was a little hectic, and each one got a unique name, and I minted them all myself on a Sunday evening. But it worked. And guess what? They're out there. They're in people's hands. There's a secondary market. They're on OpenSea. And I was very happy with that decision. And I'm wondering what you think of that. Because for me, I thought I need a low risk scenario here, but I still want to pull the trigger. And I just knew it was better not to play around. And I did it. I did it with the OpenSea interface and ended up working really well. Obviously, if Immutable had been an option, I would have used that and will be in the future. But I don't know, your thoughts on that, and was my risk analysis similar to yours?
Yeah, and look, Immutable is not designed to do a 100 NFT one-off kind of thing. It's more for establishing an ongoing business where you're going to be creating and trading this stuff on an ongoing basis. But what you said is exactly right, and it's why we made our choice to use ZK rollups, which is people want Ethereum level security, they want Ethereum level liquidity, and they want something that is ridiculously easy to use. And so we have Ethereum level security. We allow you to have liquidity that is across every single application or trading venue that you use, and I'd love to dive a bit more into that as well. And we literally use APIs like Stripe to build on, other than you're requiring any smart contract knowledge at all. And so your sentiment is a very common one. People want to do premium NFT projects on Ethereum. It's where all the activity is, all the liquidity is. And people are happy to pay gas fees for that. It means you get a better price or you sell more assets. So at the end of the day, liquidity is king. And people will always balance that against carbon neutrality and cost of goods sold. But if you're doing a high value, low volume NFT project, it's a great place to be.
Yeah, let's talk about trading platforms, because you guys are creating one with GameStop right now. That was a big announcement. Obviously, you had the TikTok deal you announced, I think, a little last year. Talk to me about these moves you're making in these marketplaces and why it's important that you're doing it and what you're trying to do.
Yeah, so right now what we're seeing in the NFT landscape is siloization of liquidity, because let's say you are Fortnite and you're creating NFTs, hypothetically. First off, you want people to trade inside Fortnite. That's your business. You keep eyeballs, you create brilliant experiences. I think Netflix literally came out and said Fortnite was their main form of competition. People are competing for attention. And so that's where they want users to trade. But there's a problem, which is then if a user sells an asset in Fortnite and all the buyers are on OpenSea, because that's where a huge amount of the volume and demand is, or a huge amount of buyers are on GameStop, because they've got this awesome gaming NFT marketplace. You have this problem, which is this ask can't connect to this buyer over here. And so what Immutable does is it operates as a global backend. It opens up the order book, and we literally call it the open order book, which means that someone selling in Fortnite can be bought from GameStop or from OpenSea, or literally from APIs if they're a programmatic hedge fund and they're trying to market make on in-game items. And the reason this is so powerful is it creates global liquidity across every single instance that NFTs will be traded, but it also allows each of these parties to take their fees. So we're allowing incentives for participants to create the best possible economy. And the reason I think this is so meaningful is we're going to see a lot of demand coming from everywhere and a lot of supply coming from the origination or the applications themselves. So traditionally what we're going to see is, let's say you're a game, players will want to sell items inside the ridiculously basic user experience of that game. They shouldn't even know it's an NFT. I got a sword, great, I'm selling that for $1. But a huge amount of your professional liquidity is going to come from these pro trading platforms. It might be Coinbase, it might be OpenSea, it might be GameStop, Immutable Token Trove. And so what we're doing is we're kind of connecting those buyers with those sellers. And the other thing we're doing is we're allowing the best possible marketplaces and the best possible trading experiences to emerge, because if you're a new marketplace, you can actually come and you can have access to all of these orders. You can start trading things and you can differentiate on the user experience that you create in the exact same way that, we saw Craigslist become 100 companies, Airbnb, it became Upwork, and each of those had the best possible user experience for the vertical that they were focusing on.
Is there anything to stop these games from allowing you to plug in as they try to keep their closed metaverses? And we can talk a little bit more about that. I mean, will Fortnite let you in? Will these other places let you in?
Look, we can't force people to do anything. We can't force people to use NFTs. But I think the financial impetus here is, they want volume. They want the maximum liquidity and volume. And that means you want to combine liquidity from everywhere while still being able to control the parts of the business that you own.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.